Vincenzo'S Gold Crypto Investing this June the 6th, 2025 daily mid-afternoon cryptocurrency, the blockchain technology, and XRP video that you've come to expect, love, need, and deserve from the number one and only retail investor based and created station for you, the retail trader. A little bit late today on this overcast, seasonably cool early summer day just north of downtown Detroit with a current J. The temperature in downtown Detroit is currently 63 degrees J in the great state of Michigan. And if we look at the coins today, you can see we did have a big fall from the video we made yesterday. And we did look exactly where we came down to in the Bitcoin price. Look at this. And we're going to go into the 2 hour time frame and then we'll zoom in. Look exactly where we went down to. Our first major support area. See this? We've attempted to break down out of this. Now it's attempting to confirm a breakdown. And we had a big fall yesterday afternoon and early evening of about 3 to 4%. And look at that. We hit exactly at the 50-day moving average in the daily time frame. And then since then, we've had a nice bounce of about 4%, 5% from the bottom. We went from about $100,600 all the way up at current price to 104,600, right? Hit off the technical level. And now what we're watching for on this Friday going into the weekend is, do we continue to pump this weekend to the upside and try to make a run up and retest up here this weekend? You can see Thursday, this weekend would be Friday, Saturday, Sunday would be up here pretty close to that technical target. Do I think that's going to happen? No, but is that something that you should watch out for this weekend? Yes, because that is possible. On the flip side, which is more likely, as we continue to chop around sideways this weekend and actually end up coming down here and hitting this 97,185.38 over this weekend. So that's what we're going to be watching out for with the Bitcoin price this weekend. And I'm going to stay on top of this for you. Oops, I deleted my other end of the rising channel. But we're going to continue to follow this nonetheless as we continue to stand pat that even though this did break that all-time high, we identified this or readjusted our analysis based on the price. That we still believe we're coming down to some of these lower lows, but what we did indeed form here was just like we had here, where you had a mountain double top there. See that? And I'm topping reversal pattern. You had your first run up, bam, and then you had a 50% consolidation. Then you briefly made a new all-time high. Oh, wait a minute. This is the current one. Go back to the last one right here. See how similar they look? It can confuse even the most well-trained eyes. But you had the first run up, a 50% correction, and then the second one for the mountain double top, right? And then you had your breakdown. Now let's look at what we have here. See that? You had your first top right here. Didn't have a 50% correction, but did have a 30-something percent correction. Went to your second double top briefly and just broke a new all-time high. And that, I think, is something that we should pay attention to, because this could be something that we're in, and it's just redoing similarly to what happened the last time in this head and shoulders topping out reversal pattern. Some may call me naive or dumb-headed and stubborn-headed, but we could still be in that head and shoulders topping out reversal pattern, except with the head, you have a double topping head instead of just a singular move to the upside. So that's something that we're going to look at, because a technical target would get you down here to about $49,000 from a move from the double. Come on. Why won't you let me grab this? For the love of Christ. Yeah, let me grab everything else. That would be from the mountain double top, top one, top two, neckline, point of a breakout, and that would get you down here to about the 48,955, and probably a flash wick, and then coming and getting bought back up to the 57,000. I know that seems like it can't happen. We just still do not want to buy you. Not saying that it has to happen, but it's something that I'm still thinking is very, very plausible. The same thing with the XLM. You can see the red, the blue, and the green line, the light green line that are always there with my moving averages. Those are the moving averages in this chart of XLM in the monthly time frame. See if we go to the month or the weekly time frame. Wait a minute. Yeah, the weekly time frame. These are the weekly time frame in here. See that? And look at this chart that we've had, and we've been going over with XLM. You can see we've had very similar states of affair here, where if we bring our industry exclusive YouTube created and made famous, now everybody's using them, pointer tool, you can see we had a symmetrical triangle, a parallel one. It's just running from west to east with descending upper resistance, uptrending lower support. And this consolidation went from 2014 to 2017. And then you had your big breakout that ended up being, I don't know, about a 60 times move all the way up here to 87 cents from the breakout point of about 0.002369. And now since then, where you can see from 2018 all the way till now, 2025, we've been in an overhead descending resistance underneath uptrending support, a symmetrical triangle running straight west to east. And that's how we've been playing this and following and basing some predictions in the past. And you can see we're sitting right on the 50-day moving average in the monthly. And what I think is going to eventually happen, and the reason that I have and very confident in our other chart that we use, the 18 cents, is because you can see not only is that a beautifully depicted area where the uptrend is, but the 200-day moving average in the weekly time frame is also there. And I think you're going to skedaddle, and I think eventually you are going to end up down here. And this is going to be a great accumulation zone. And this is the area that I'm targeting for a big mass accumulation. If you've never bought in the coin, I'm not a financial advisor. These are only my own personal opinions on the market. But if you're looking to accumulate in because you bought during the last bear market, and you can see where the last bear market was, this was your accumulation zone right there, right? Accumulation zone. We'll mark down these accumulation zones, right? Just in the recent, it's my lunch. I don't have time. I'm in the middle of work. We'll do that tonight. But you can see accumulation zone, accumulation zone, accumulation zone, right? This one I think is going to be a very quick accumulation zone, sort of like what you had going on back there when you get there. It's very, very quick, and it's going to have a very, very explosive uh, move. But I think when you get down here, this is a mass accumulation zone, 16, 18 cents when it hits this 200-day moving average in the monthly, because I believe there's going to be a ferocious rally from this point over the months following that you're going to immediately see a 1 to 2x return from the 18-cent level, right? And then we're going to threaten to break out of this pattern. And I'm not saying it's going to, what this target shows up here at $18. I'm more in line targeting the $1 to $1.69 level. That's my target range on this pattern breakout if it goes bullish to the upside, just like the previous pattern did. Obviously, if it goes bearish, that would be very, very bad because you'd be coming all the way back down here. But that would be a time for a different discussion on a different day and a different channel and a different year and a different universe, right? But right now, that's what we're going at. And you can see how that lines up beautifully with the other chart that we got here with the XLM. See how we're got that 18-cent level, and that's a major area that we've been targeting ever since we hit that local top up there at 63 cents. And we have our major underneath and our bottom, ultimate bottom, if it gets down there at 14.6 cents. But we have these as significant accumulation zones, and I do believe we'll be going back down there. And you can see yesterday again, you threatened to break through this critical 27 or 25.5 cents, and you can see you dipped right down to it, nipped below it, and that's exactly where you got bought back up. Exactly what we were talking about, that you would expect at least a brief buyback, just like you had last week up here. And then if you get rejected this weekend, you're flirting with that 25 cents, because obviously if you get below this 25 cents right there, that's a critical major support, long-lived support level, to where if you flip it and it becomes resistance, that's very, very bearish, very, very bad for the coin. The same thing is what we're looking at with the XRP price. You can see we bounced off of, again, And this time, last time, you can see right here, we were just above the 200-day moving average if we go into the daily time frame. And we told you on the buyback, the moving averages up overhead of you that are just about to have another bearish cross, where you can see this weekend, unless there's an incredible turnaround, the 50 is going to get below the 200-day moving average, and that's going to be a bearish cross, something that we've been warning you again after you had the bullish cross right here. But when we bounced off of here just above the 200-day moving average, on May the 31st, we told you there'd be likely a buyback when we were headed down towards there from the $2.55, $2.65 level, getting rejected by that major overhead resistance level that's been there for about 4 months. We told you there would likely be a buyback here, and then the most likely solution after that into the near future, which has now become the most recent past, would be the moving averages of the 50 and the over at 100. And you can see that's exactly where you got wicked down to. But also when we were back there, we told you the next time you come back down here, you were going to breach the 209 neckline support and actually hit the 200-day moving average in the daily time frame. And you can see that's exactly what you did here. Now we've wicked back up. Something that we also told you would do, you would at least have a brief buyback, potentially as high as the falling overhead moving averages above it again. And then this would be your decision zone, which looks like it's going to come on the weekend, where if you breach through this neckline support, that's going to flip a long-lasting major support level to a short-term to medium-term major resistance, and that could be a catalyst that starts the next leg of this breakdown that actually gets you back down here towards the regional low that you had right there at $1.61 wick low before you had that significant rally back to 265, right? And that's what we're going to be looking at if you slip this and confirm this from major support, 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 whole bunch of support, 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 support. If you flip this to major short-term resistance, these overhead moving averages are going to tank, the price is going to collapse, the volume is going to spike, and that's going to lead to a short-term target being hit, something that we called when the price was way back up here at well over $3.35. We told you this was our price target of $1.29, and we've stuck that out ever since early to mid-January, followed by what we think will be a quick, swift pump back from about the dollar to $1.29, wherever the wick is, all the way back up to probably the $2.50 very, very quickly. And that could be another major accumulation zone in the XRP. The AMP is trying to show signs of life. It is the most painful coin out of them all that you have to wait for this thing to move, but it's still trending down. Obviously, our short-term support, major resistance on any kind of pump is up there at 0.006. We'll continue to talk more about that. The XCN, I didn't want to forget. You can see the XCN is another coin that came down exactly where we've been talking about. We thought it would come down to the last couple of days as we're about to have another bearish cross. We're just above the 200-day in the daily. We got not only one, two, three rejections. Now we're back on this major support level. That is the top part of this darker purple zone. We got to touch the 200-day moving average. What you're looking at now is a potential bearish cross from the 50 going over below the 100, and then in about 2 weeks, the 50 getting below the 200, which would be a golden bearish cross, and that would be enough to force the price down very, very quickly back down to the 0.00801, an area just like you shot through it, you'll flop right back through it down to this major support level if you can't hold this 200-day and this 0.01496 and somehow flip and get back over top of these overhead resistance levels, right? Like you did back here, you need to do that again right here to try to finally breach through this major resistance level. But right now things are bearish and we got to pay close attention over this weekend. The XDC is the same thing. You can see we've had our uh, golden bearish cross where the 50 has now gotten underneath the 200-day moving average right there in the XDC. We've gotten down to the 0.06, an area that we told you would when we were up here. If you breach these moving average from our regional low, you do know our technical target is 0.04163104 from this head and shoulders that we identified back when this pattern was pumping in late January. Just like all the other coins were, we had this target on a reversal because it had such an explosive big move from bottom to top. We knew there would be a mid-ground consolidation where we felt like it could get close to here, and you got to put a target, and this was our target, followed by a rally after that. We think there will be the end of 2025 going into 2026. But you can see even after this COVID rally, it was still well off its, or after the Trump rally, it almost got back to its old high, but it did not quite make it. But after you had from the bottom of the local move to the top, you had a 5 to 7x move. We felt there would be some kind of consolidation. The same thing with the DGB. It was in a similar pattern. It hit up against a major resistance, had that head and shoulders topping out reversal pattern here. We put our technical target down near this 0.00586, and you can see now the moving averages have formed a bearish cross, and it looks to be a golden bearish cross is actually happening within the next couple of hours, where the 50 has gotten below the 200 day, and the 200 day is about to be the one on the top. We're about to breach a major support level at this 0.00846, an area that we're desperately trying to hold, because that's the last thing that's holding you between there and there, decides a mid-ground reactionary bounce back from a technical level here before you would eventually go down there if you do indeed breach this critical level. Like the channel, subscribe, members of Jabroni Killers. Peace and love. The Rex Eyebrow. J.